Hey, welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name's Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. My guest today is Scott Redler. Scott is the co-founder and chief strategist at T3 Trading Group, a well-known proprietary trading firm. He has perfected his trading process over the past 2 decades and takes a very disciplined approach to the markets. It'll be a fun conversation as always, and I guarantee you'll learn a thing or two. But before we talk to Scott, it's Friday, the markets are closed, so let's take a quick look at how this week played out. It was another solid week for stocks. All 4 major indices closed higher. The Russell 2000 led by a big margin, gaining nearly 5.5%. It had a huge rally on Tuesday, but it's really just playing catch up here. The Dow lagged, but still rose nearly 2%. Taking a closer look at the S&P 500, it closed higher for the 3rd straight week, rising more than 2%. It made most of its gains on Tuesday and then just kind of chopped around in a tight range around 4,500 for the rest of the week. It'll be important to hold above that gap from Tuesday next week, so make sure it doesn't close below 4,400. But if it can do that, the next task for the bulls will be reclaiming the summer peak around 4,600. Now that's really the last major resistance level before testing record highs. So keep an eye on that 4,600 level in the near term. Now, taking a quick look at sector performance this week, all 11 sectors closed higher. Real estate led, gaining over 4.5%. Now, it's been the laggard for years, but it's really perked up in a big way so far this month. So definitely an area to keep an eye on in the near term. Consumer staples lagged, but still ended the week higher by about 70 basis points. Anyway, that's enough from me. Let's see what Scott has to say. Scott, welcome to the show, and thank you for coming on today.
Thanks for having me. I've heard so many good things. I was excited to be on with you.
Yeah, I'm glad we could make this happen, and I've been following your work for some time now. We only met once, so I'd like to get to know you a little bit more, and I'm sure our audience would too. So I got a few just general background questions to start, and then we'll dive into the charts if that sounds good to you.
Sounds perfect.
So how'd you get into trading in the first place? How'd you get the bug?
I probably got into trading when you might have been in kindergarten. I'm not sure. I'm not sure how old you are. But I started in 1997. We don't have a lot of time, so I can't tell you exactly how it started. But I started at this firm called Broadway Trading. That was when the NASDAQ was like at 3,000. Everyone thought they could get rich trading tech stocks. And a lot of people did. You know, a lot of people just used price action, relative strength, the Instinet machine. When the quadruple X's would come up, they'd follow orders. You didn't have to be that smart. You just had to follow the trend, higher highs, higher lows. So I did that from like 1998 to like 2000. And I was a rookie when we had the big move, .coms on everything, and things would go up 100 points and everyone would make a ton of money. No one was really educating themselves on technical analysis and strategies. They would read the most active section of the New York Post and see the top 6 stocks, and that's what they would play for the day. Wow. And then it all kind of changed when the NASDAQ bubble burst, and we went from 5,000 to 1,000 down to 2002. I think I had 400 traders in my group. We went down to 30, and that's really when we became serious and started to educate ourselves.
Wow. So 97, I mean, that was before the speculation really ramped up, right? So you kind of had a front row seat to that whole process, right?
I was living it. It was the first experience on real volatility, on big moves. I've learned on the fastest moving stocks out there, which is why I like to trade them, because when you're right, you get paid. And I learned that stocks can go up, and then learned that stocks can go down, from NASDAQ 5,000 to 3,000, 2,000, even down to, I think, went to 1,000 within a few years. You learn that you don't catch a falling knife. You become calculated, use a plan. You go level versus level, your time frame. Otherwise, you blow up like probably 470 of the traders that were in there, that left 30 of us to then enjoy the next bull market when we invaded Iraq in 2003, all the way up to the next financial crisis which happened in 2007, 2008.
Yeah, I'm sure a lot of the best lessons came on the decline, right? On the bubble popping there. But my next question is, what led you to technicals? Did you always start off with that kind of approach to the market, or did you start off kind of using more fundamentals and news and gravitate towards technicals? What got you to the charts?
It was always the charts. You know, I actually was a micro guy that became more macro. I started just trying to make a few $1,000s a day using pure technicals, pure charts. And then, you know, as I said, come 2003, when I started to educate myself a little bit more, I went out to the West Coast, took Willie O'Neill's classes with Investors Business Daily. I started to read a lot more. I learned a lot more about indicators, a lot more about the chart patterns that I didn't even know existed, that kind of reinforced what I was doing and how I made money. And I really started to, think a little bit more broad, because I also wanted to start taking overnights. I started to want putting more buying power work. So as I graduated through the process of becoming a young trader to someone that's evolving, you had to have more tools in order to have that much more conviction to put more money out there to stay for longer moves and into a more of a swing trade type of scenario versus just trying to make money every day, go flat at night. So it was a total process. But I started really price action, relative strength, look at the inside tape, to learning a lot more about the macro. And as a technician right now, it's not about just charts. It's about knowing where the hot spots are, where things came from, what's priced in, what's not. And it's really, you have to know fundamentals also. You need to know where did the stock come from and where did it go to, and what's priced in for earnings, what's the whisper number, where should it go, where does it have to hold. It's not just pure technicals. I think in order to be a successful trader out there, you need to know a little about a lot, what's the over focus, and then a lot about the technicals. And more importantly, you need to know what time frame you're looking at. And hopefully at this point, if you've been doing this for a while, multiple time frames, so you could take advantage of every different approach to the market, which you have to do as you become a little bit older, through the years.
Yeah, I mean, thinking in multiple time frames and having to kind of compartmentalize them like that can be tough, but it's really important. You've been at the game for a while now, and I know you've worked with probably hundreds of traders, thousands maybe, around the world. But what is the biggest change you've made to your process over the years that you've seen yield the biggest results? It could be anything from over trading to, is there anything that comes to mind?
It's really controlling the mindset. The market's going to be the market, movement's going to be the movement. Every active sequence, or whatever you want to call the trend, is going to be very similar. It's going to be your approach to it. And if you're not thinking clearly, it doesn't matter what you know. Moving averages, chart patterns, pivots, stochastics, whatever it is, you're not going to see it clearly unless you're in the proper routine and you're properly set up for the day. And let me lower this. I've been doing that for a long time. I back in the day, I don't know if you remember Trader Monthly magazine. You probably might have been in elementary school when that came out. But I was writing a section. I did a big section on triathlons. Like, the editor was like, "Oh my goodness, you just did an Ironman. How do you train for an Ironman and also train for the stock market?" I'm like, it's very similar. You need to be disciplined. You need to be regimented. In order to complete an Ironman, there's a lot of things you got to do. You got to train. You have to have the right nutrition. You have to have the right sleep. You have to have the right outfits. You have to wear that spandex that looks a little weird on, but if you don't, you're not going to be able to ride the bike or run too far. It's going to be a little friction. But anyway, as a trader, you have to have your routine and your process. So I'm up every day at 4:45 in the morning. Okay, what I do is I go in my sauna for 30 minutes. That's where I kind of think about my positions. I do about 200 reps. I listen to some motivational podcasts, get my mind right. Then I go out, no matter what the weather is. I've been doing it for a year and a half. I go in an ice barrel and I sit in an ice barrel, think again
every
about
day?
Every day, sometimes twice a day.
My gosh.
It's a movement.
You've completed 2 Ironmans, is that correct?
Yes.
Wow. The idea of running a marathon is in itself an accomplishment. I can't imagine doing the 2 other events that you have to do and then completing the marathon, right?
Oh, you mean like swimming 2.4 miles and then riding 112 miles on a bike and then doing a marathon?
that's exactly yeah, that whole thing.
Well, it's the same thing. If you think about it, you got to start with a mini triathlon, and then you have to start. You do an Olympic triathlon, and then you do a half Ironman, and then an Ironman. The same thing with trading. You start off as a day trader. You make $300 a day, $500 a day, $1,000 a day. You're doing that for a while. You start missing trades overnight. Now you're like, hey, how do I, all of a sudden be a day trader and also have some swing trades? You start to figure that out. Then all of a sudden, like, hey, I want to be in options. How do I play options? Oh, I want to be in futures. And all of a sudden, you've been trading for multiple years. And now instead of just trading intraday, you have an active account, which I have, a swing account. Then you have an options account to play binary events. Some people have futures accounts. Then you have a crypto account. And, you put that all together and you're like a little PM these days. The day traders out there are the algos. The sophisticated prop traders right now know when to put risk to work and then figure out how they could do it where they're comfortable doing it. Otherwise, they're never going to make money.
I like that, kind of, separating it like that. I think it is important to have different accounts for different time frames like that, so that you can kind of think about, you have your day trades, you have your long-term account, and maybe you have your speculative options account that you want to, take lottery ticket plays on.
By the way, options aren't speculative, Pat. The options define your risk for binary events. Sometimes it's more speculative to be in a position into a CPI or a PPI or a jobs report. If you trade options, if you're long calls or puts, you're actually placing a calculated bet and your risk is premium paid. So don't say options are speculative. Some people play them speculative, but most traders that are sophisticated use options to define their risk into binary events. It's just another tool, another way to create cash flow depending on the environment.
That's an excellent point. So you don't just trade stocks then. You trade, and I know you're trading ETFs a lot too, but options, do you do any futures trading too, or?
I don't really trade futures because, again, I'm up at 4:45 in the morning and I try and go to sleep by 10:30. If I traded futures, I'd be up all night. I wouldn't sleep, and then I would lose my head and I'd be out of the business. You got to pick and choose your battles. I think there's enough for me to be involved in, and I know what makes me tick, and I have to go to bed by 10:30. Otherwise, I'm going to be pressing the snooze button, and I think champions don't press the snooze button. They get up when they say they're going to get up.
I like that. So you're not just a shorter term trader, but even with your shorter term trades, you do still have to pay attention to the broader market environment, right? Like when you are putting on day trades, you're still very aware of the environment, and that's going to influence what you're doing day to day. Is that correct?
Yeah, you have to. You have to know, are we in an actively bullish market, an actively bearish market? Are we more in a bigger uptrend with a minor pullback? Are we in a downtrend with a bounce to short? We need to know in the broader indices, what's the market obsessing about? 6 months ago, it was whether inflation would peak. Then about a month ago is whether interest rates would peak. At this point, both have proved to peak. Now it's how much are they coming in? Okay, and at this point, we've had a 3-week rally because of both of those narratives proving that that's the case between the jobs report, between the CPI and the PPI. Inflation's under control, so are rates. But the question now is, do we have a soft landing? So you're going to hear all over the TV sets, is it a soft landing or hard landing? When are we going to have a recession, right? A year ago at this time, everyone said we were going to be in a recession the first half of 2023, and we had a face-ripping rally that left everyone in the dust. Now everyone's saying it a little bit more cautiously because we just pretty much normalized for a year, right? On a macro sense, that's what we did. You can't have free money forever. So they had to raise rates in order to slow things down so people don't overbid for houses, and we don't have $5 gasoline on the East Coast. So they had to raise rates to slow down demand, make things harder to buy. And that's what they pretty much did. And it's proven. So now the question is, after 2 years of sideways action in the S&P, was that enough to create a new move to all-time highs in the next 3, 6, 9 months? And in order for that to happen, we have to not fall apart as far as, data getting too weak and earnings going too far down. So if we get a soft landing, which means a minor slowdown, rates come down, we continue to normalize, chances are we'll probably be in S&P new all-time high, I would think in the first half of next year, if not the second half of next year.
Yeah, I like what you said there too. Obviously our show here is called Trendlines over Headlines. But what you're saying is you pay attention to those headlines because you want to watch the market's reaction to them because there's information in how the market's responding to them. Is that fair?
That's a very fair statement.
Awesome. Well, so with that being said, let's take a look at some of these charts. Let's kick it off with the S&P 500. What are some of the levels you're watching, or maybe indicators?
Okay, well, here's the S&P cash on the daily. All right, if you look here, you'll see that we hit a low of 4103, right? And then truly, when I think a lot of people like, oh, is the train going to leave the station? Like you hear that on TV all the time. That's funny. It's just filling time. I thought on this day, which was November 1st, when we took back the prior lows of October, which was 42.16, that was the day we took back the 8-day moving average. That was the day I went from trying to be actively tactical with a lot of cash to putting some things to work. Some tech names were acting really well. Some names were near weekly and monthly highs, proving you could sit in it. On this day was when I was like, all right, this is when we could put some money to work. Because to me, I use the moving averages a lot. So I have two different approaches. Tactical approach is when we're in a downtrend, we're below the 8-day and the 21-day, and sometimes below the 50 and 200. I'm in a lot of cash, and I'm just trying to use little tactics to make cash flow because I don't want to be in the way. Once we take back the 8 and 21-day and we start what I call a new active sequence long, I try and put on some swing trades and massage them, meaning buy a dip, trade them through a price point, sell some into strength, buy some back, and manage the sequence. I try and have some of my capital working so I'm not just overly trading, so I could trade and let the market make me money. So on this day, it felt as if the active bulls took back control. And then, like you said, your show is Trendlines, right? Well, we took out this trend line pretty much last Friday, right? This was when we were playing with it. Last Thursday was a little bit of a trap. That was tough, right? Looked like this active sequence was going to fail into this trend line. And then they trapped all those shorts that day. And this was the day that it said, and we went pretty much all the way back to my next resistance zone, which was 45.11 to 45.40. So as of right now, you could see here, today was an interesting day because we didn't even pull back to the gap from the CPI, which you had to know. The CPI came in less than expected. That's what the market wanted. Another gap. Everyone who's been thinking we have to fill this gap and fill this gap, and we're shorting, they're getting their clock cleaned. Anyone that's, which you don't like to see anyone. Like when people are like applauding that Burry lost what he lost because he had to cover his shorts, I was yelling at him like, you know what? You're insecure. You don't try to feel good.
And I don't think it was even as bad as most people thought. Back when that short position was reported, it was totally misquoted, I think, right?
Well, they did lose quite enough money. It was more of the mentality. When you're, when you're in grade school, what did you just graduate from college last year? No, I'm kidding. You look very young. You're taught by your parents, right?
I'm 30 now. I'm 30.
Oh, you're a real guy, 30 years old. The guys that have my interns look like you. They're like 22, 23. So
yeah, I'm just starting to get back pain. It's great.
But, you don't feel better about yourself by looking at somebody caught in a pain trade. A lot of traders get caught in pain trades. What's a pain trade? Usually you're up like 7-8 days in a row. You're in pain because you had great longs and you sold them too early. And then maybe you're in pain because you started shorting too early because we are overbought. And we've all been there. So nobody wants somebody to say, oh, look at that guy in the pain trade. It's karma. And karma's it could bite you in the tush. So anyway, so today, what did we do? We just, basically played with 44.95 in a tactical measure and held. So if we hold here and go sideways and build another upper bull flag above the 8-day and let it catch up, there is a chance that we could trade back to this 45.40 to 4600 level, which is what we saw over the summer. So the fast and furious part of this move is probably over. Now you go a little bit of sideways, and if we can go sideways and take this out, you could see 4607-ish. You hear a lot of talk about everyone, the small cap's going to do better. Some of the real, the equal weights are going to do better. But at this point, still tech is in charge. Yep. The Qs are probably going to make a new monthly high, maybe an all-time high within the next 6 months. I am hoping the small caps could play catch-up because we had a good move, and today was a little wishy-washy. But, if you look here, you now have a new point of reference in 44.87. I think as long as we hold above this gap moving sideways, there's going to be, a bunch of power still there. It's going to be a little less choppy. If we traded into this, then this would be your next level below that you probably would think should hold-ish. okay, which would be all these moving averages. So this is like real support. And then this is probably the level that if we're going to continue into year end, we don't trade back above this prior high, which should turn into support. But if we hang up here, the move is going to be a lot faster. And if you look at the weekly chart, because it's good to always use a weekly chart too, I was showing this cup and handle pattern, okay, that, you had a huge cup, came into resistance, usually come into resistance, you created a handle, and look at this weekly beautiful candle that took back all the moving averages. So now you just had a bit of follow through, and I could see it needing a little bit more time before it makes an attempt to that. I'm kind of in the camp that we're not taking out, much more than 4,600 into the end of the year, but I don't like to put guesses out there. Some people love when Red Dog puts, projections out there. I did call the summer top, and I'm on TV, twice a month, Fox Business. I've been on CNBC probably 100 times. But more in all, you don't make money by making predictions. You make money by following your game plan, thinking clearly, and executing with confidence, and that's how you make money.
Yeah, and you mentioned that cup and handle. It looks even better with the NASDAQ, right? With the Qs, kind of almost even better formed on that one.
I actually put that up. I put that the other day. Same cup and handle. And look at this in the Qs. You also had a beautiful wedge. First it's actually cute. They had to break it below the wedge, get everyone real bearish, come in and test support and test the 50-day here. And then this candle basically negated these 2 weeks. So if you have one candle negate 2 weeks, it shows you power. And that power will end up giving you a move right back to the summer high, which at first usually, you kiss a big level, you see some sellers. And then if you can hang there, then you can really take off. So now if you go from the weekly to the daily, you can see what I'm talking about. Basically here you are, where today the bears had their chance, a bear's chance, right? And they could not even fill this gap, right? They couldn't even fill this gap. So if you could hold this gap and go sideways, chances are the next time it tries to trade through 387-ish or 388-ish, you're going to have another move. And then you have to just keep massaging the positions. Microsoft's at an all-time high. It looks like Meta's on its way. Apple's playing catch-up. So there's a lot of dots to connect. Yeah,
there's a lot of talk today about Microsoft's market cap crossing Apple's for the first time. That chart just looks amazing. But you touched on it earlier. There is so much concern out there about the mega cap leadership, and narrow leadership, and the fact that
Who's
small caps aren't participating. Do you worry about that?
The reporters on TV are concerned about it because they need something to talk about.
Right, that's what I'm saying. Yeah,
I'm saying, but it's just talk. If you were involved in an S&P 500 fund and you put it to work in a 401k every single month, you're up 20%. If you're doing that over 20, 30 years, you're going to get rich. Pat, you're 30 years old, put money in an S&P fund every single month for the next 20 years, and you have a lot of money to retire. If you get married, you look like a handsome guy, and you have a kid, you do a 529 every single month forever, and you could pay for college. That's different, okay? If you trade for a living, yes. You know what? There are 7 stocks that have been technically acting well. We're trained to find those stocks. Those are the stocks that we're in. Okay, like right now, I'm in Microsoft also. I'm in Meta. I'm looking to see if I can get back in Amazon. I tried the small caps. You don't have to be in the other 493 stocks if they're not working as a trader. We could pick and choose our battles. And now maybe we could be in the IWM. You look at the IWM. I personally made a lot of money going into the CPI. I was buying options thinking that, hey, maybe, everyone's off sides here. And then we wound up hitting 181. But I actually... You were long IWM? Yeah. I was long options. I was long the one, I was long the ones, I was long here first, and then I sold some, and then I started buying back too quickly because I thought maybe this would hold. And then I added options because, again, options aren't risky. Risk is premium paid. More risky to buy something on the way down because you never know where it's going to go. And then I sold some into strength. And today, I started buying a little options back. Chances are if this was any other sector, this should hold us 175. But chances are the IWM is so sloppy, it's probably going to come somewhere into this gap before turning up. But all in all, everyone's like, oh, my God, look at the size of this move in the IWM. You go to the weekly chart, and it's nowhere. It's still in this 3-year range, and it just went back halfway into the middle. So if it could hold here now, I'm kind of thinking in the second half of 2024, it could fill this quadrant and then maybe even take it out, because it tried to take it out in July. It just couldn't. So anyway, You know, you could be concerned with anything out there. There's always bears and fear mongers and people who want to create content. Okay, traders look at the action and traders could control their actions. Mega cap tech is working. That's what you stay with. I remember a month ago, or everyone was making fun of me that I wasn't in the energy sector, right? The energy sector, oh my goodness, how could you not be in the energy sector bull market? And guess what? You see this 2-year range? Right here is where it looked awesome. And then if you fell asleep on October 20th, if you were taking a nap and didn't get out, all of a sudden now you're in the bottom end of this range. So, and there's your 1-day moving average. So
for a while there, it was like energy was the only game in town. Just, for a little bit in the summer, it felt like 2022 all over again. But then, nothing really materialized out of it. But I really like what you said there about, my question as to, are you concerned about breadth? I mean, isn't that kind of what makes the S&P what it is, and why people like the S&P 500 so much is because it's a cap weighted index, and the cream is going to rise to the top and then the crap's going to kind of sink to the bottom. And then people still get angry when that happens, right?
People get angry when it happens if they're not performing well. They want to point the finger why they're not performing well. Well, it's only 7 stocks. Well, how could you not be in those if they're acting best? That's why we use relative strength. Then new active sequences happen, right? We've had this earnings season has been fantastic. You know why? Because you've had a lot of gap and goes. You know what that is? That's a pro earnings gap on good earnings. So these broken names that are part of those stocks that weren't performing all of a sudden give you a way to trade them as a trader because they give you points of reference to trade against, right? So let me give you an example. Palantir is not one of those 7 stocks, right? It's not, one of the mega cap tech stocks, but if you look here at Palantir, okay, look at this gap up right here after earnings said, hey, you know what? If you hold this gap, chances are it's going to trade in the direction of that gap. So you could have bought this day, put your stop here, and it's been trending nicely. And this has not been one of those names, but it was a piece of business to go with, right? And a lot of these, Square, I'm in Square right now. Square has been left for dead. Yeah. Guess what it had? It had a gap up after earnings. I got in on this day because I was able to use my point of reference right here. And now look at that. It was able to make good money in the options and the stock, but it's defined. So it's on its way up to the 200-day. You look at the weekly chart, it's called like a trash, you might treasure someone else's trash because guess what? On the weekly chart, they didn't sell when it broke all the moving averages up there. This is not my problem. This is someone's problem who has no rules, who are listening to the people on TV, who's probably part of the investment club from CNBC. No, I'm kidding. Kramer's covered. And it was a bull of the 8 day the whole way. But now, hey, maybe there's some room to $62 and I'll make decent money there, and that'll be an active trade. And I don't care that it's not one of the ones making all-time highs. It's a different type of trade. What type of trade are you looking for, and how could you define your risk? That's what traders need to ask themselves. Not, am I worried that it's only 7 names? Don't be in the ones that kind of suck and they'll blow the 821 day. As a trader, you don't have to be. And if you can't do the work, buy an S&P fund every month for the next 25 years, and it doesn't matter to you.
Well, I like this. And I really like your kind of holistic approach to the market where you kind of bring in everything you can and kind of all the evidence that you can to strengthen your position.
Yeah. Listen, we don't have a think tank behind us. I don't have an expert network. I have charts and I have my community. I have the Alpha team. The Alpha team is 500 traders from around the world who are part of my team. They all trade at different firms. We're on a platform where they could see what I'm doing, they could post what they're doing, and we post news and we talk about levels and we point out things in the morning. If the market goes and a stack lags, we kind of like that showing relative weakness. We don't want to go there. Market just came in, this perked its head up. That's something to look at. I'd rather be talking to my team versus, I don't even turn the TV on until about 9:15. I'd rather listen to 80s rock while I'm doing all my charts.
I like that. I certainly agree with you there. But let me ask you about the head and shoulders in NVIDIA that didn't play out at all like people thought. I'm sure you saw it. Everybody seemed to have seen it. You know what I'm talking about?
I've never seen it before. I'm kidding. I'm going to show you the day that mattered. Now, I don't know if you're too young, but do you have any idea what a red dog reversal is?
I've heard of it, but why don't you explain it?
So you've never used a red dog reversal?
I haven't. Maybe I have. I'm not aware.
All right, I'm going to give you a homework assignment. Look up the red dog reversal. Anyone watching this, you can go Google the red dog reversal. You'll see about 50 different examples of something that's worked for the past 20 years. Okay, it doesn't matter the type of market. All it is a strategy with defined risk showing you who's in control. How do you do that? You look at a prior day's low after multiple days into a major level. Sometimes it's a major level, sometimes it isn't. If you identify where the rubber match is, you see who wins active control, and you can figure out what's next. So in NVIDIA, this is a very great example of a big time red dog reversal. Right here, right? This was your head and shoulders pattern that everybody was looking at. Everyone in the world.
Just to be clear, you did coin the red dog reversal?
It's not one of those movies you watch on Cinemax.
I don't know who else.
Italian Stallion. It is, it could be a bottom tail, it could be a hang tail, it could be whatever you want it to be. I'm a little narcissistic, so I named the tactic after myself, the red dog reversal. Some people call it the RDR if you look at it on Twitter. But if you look right here at the chart, you'll see, this was a head and shoulders top. Okay, this was your left shoulder. Here was your head. Here was your right shoulder. This was your neckline, like 400 to 398, and everybody was watching it. So this is what happens. The reason why a head and shoulders top pattern works is the neckline, it's big support. If that support breaks and you get under and stay under, all those people buying it there get out, and typically you have a measured move from the top to the neckline. Okay, so that was
which should have brought us back to the breakout level, like basically the 2021 highs. Yeah,
shoulda, coulda, woulda.
Shoulda, yeah, shoulda. Right.
Look right here. Look at this day. Look at this day. Right there on October 31st. This candle, that's the candle that the head and shoulders sequence holder bears lost control. Why? They tried to break it below 398. They tried to break below this pivot. They tried to break it below flow. What happened? They got everybody out, and then guess what happened later? It reclaimed 398,404. So this candle right here on this day is the day that changed the entire pattern. Okay, and then now what happened? All of a sudden you go right back to the upper end of the range here. Now let's see if we get an upper little bull flag, and hopefully, it delivers on Tuesday. Big beat, raise guidance, split the stock, and the stock could be 550 or so. But
that's right.
This is the day that changed it. That's the day that changed the whole thing. If it closed below, you know what? The active bears had control. They were able to keep it below. But they lost control that day when some longs got flushed out, some shorts got caught, and then they might have even rolled it up this entire time. Oh, guess what? What a quinky dink. It took back the 8 day right there. What do we do when it's above the 8 day? We're buyers. We don't short this thing. It means it's strong. And right here, even if you missed a red dog reversal here, you could have bought it on this powerful day and, taking out whatever you wanted to take out of it.
Yeah, I mean, that was just a spectacular move. Cracked the neckline and just never looked back. And I got a homework assignment, the red dog reversal. You best
Everybody, anyone who's watching this, take a look. You might see me back in the day. I think I was a little chubbier actually, but maybe a little less lines. My forehead's getting really big now. I had a little bit more hair, a little poofy hair, but I started it probably a long time ago. Well, all it is a way to identify the rubber match spot. If you're down for 2 days in a row, how do you get to a third day down, Pat?
A reversal?
No, if you get a third day down, you have to get below and stay below the second day low. So you have a third down day. Then how do you get a fourth down day?
You get below the prior low?
And stay below. Right. And then all of a sudden, if you're down 2 days in a row and you think it's going to go down a third day, it breaks below and then reclaims that level. All the guys thinking it's going down for 3 days are caught short. Anyone who is trying to play a bounce need to buy it. So it turns into this action area of, where you can make a great day trade that's defined. And then sometimes it leads into a new swing trade. So in order to have broken this neckline and how to get below and stay below, and this was after 1, 2, 3 down days, and it didn't. So knowing this action area and defining it is one of the keys to your preparation that day. And then let the stock tell you where it's going to go.
Right. Kind of knowing the levels and kind of seeing how the market responds to them. I think that's a great kind of key point right there. But before you go, I kind of just want to ask you some general trader questions because you've worked with so many traders, gotten the chance to train and learn from hundreds, probably thousands, right? What do you see the biggest mistake, the one biggest mistake new traders tend to make?
Well, new traders, like you're talking like right out of college type things.
Well, beginner traders. I mean, you've trained a lot, right?
Yeah, well, the beginner traders, it depends. If they come right out of college, they're usually a little, a little boisterous, and they think they know it all, but they don't realize that the market's going to make everyone feel bad about themselves. So
Right.
I tell them to lose as less as you can the first year or two while you're learning. So this way, when you get your graduate degree from trading for a year or two, and you lose, when you finally get it, you don't have a big hole to get yourself out of. If you go to, college and you want to become a lawyer, you don't just become a lawyer after college. You got to go to law school, spend $250,000 or more, and get your law degree. So then you could then work 1,000 hours a week. If my wife's a neuropsychologist, she didn't graduate from Albany with me, and become a neuropsychologist. She had to go, to graduate school, do her internship, do her fellowship to get good at it. So why would you be a good trader starting out 3, 6, 9, 12 months? No, you're in your training phase. You're learning the ropes. You're learning what makes you tick. You're learning, where you think your strengths are. And obviously you see what your weaknesses are to try and stop those. So the first year or two, don't expect to do awesome. Just work on your process so this way and lose less and feel it out. So when you do get it, you can start to make money and you're not in too much of a hole. And for those who've been trading for a while, I know, like to say 2020, we had our best year, made 4 times our average. What I will say is when you have a great year, don't think it's going to happen every year. It's not. Pay off some of your mortgage, pay down your credit card bills, buy your car for cash. So this way, like 2022, which was a pretty crappy year, compared to even before the pandemic, you're not with a huge nut where all of a sudden you can't pay your bills, you start forcing trades, you start losing money, you get frustrated, your head gets crappy, and then you're out of the business. Yeah. So my advice is cost average your career over time. That's the only reason why I'm still here, because you can't let your highs get too high, your lows get too low. You stay even keel and figure out what makes you tick to keep yourself even keel. So if you have a bad day, it's not, it doesn't define you as a bad person. It's just a bad day. You brush it off, and the next day you look at the right setup, you think clearly, make the right decision, and then you move forward.
Yeah, I think you said it perfectly. I mean, it's like the Dunning-Kruger effect, where when you first learn something new, you have all the confidence in the world about it. But then over time, the more you actually know, the less kind of confident you become with it. And man, from the first few trades I made, and I thought I was King Midas to now, where I definitely don't feel that way. The classic kind of roadmap for traders, right?
That's actually the most unfortunate thing. Somebody starts out and they make money their first month. They go, oh, this is easy.
Right. It's almost a curse, right? The beginner's luck.
You beginner luck.
Well, listen, before you go, where can our viewers find more of your work and follow along if they're interested?
Well, I do a bunch of things. So during the pandemic, I started this video called the 6:30 Club. Okay, it's on Twitter. I'm Red Dog T3, Red Dog T3. Every morning at 6:30, Monday through Thursday, I do a 20-minute video. I get in here. I just came straight out of the ice barrel. I'm usually in a great mood. I'm listening to some music, and I've already prepared in my head kind of what I'm looking at, what I'm in, what the buzzwords are, what's the key to the day. And I do like a quick 20-minute video going over the SPYs, the Qs, the S&P cash, a few stocks that I'm looking at, and kind of what I'm thinking about for the day. Sometimes I throw a bone right in your doghouse and make you some money, but really it just shows you the day in, day out consistent process. So that's free. A lot of people make money. And
that's something you probably do, I mean, just for yourself, right? For your own process, but I mean, you're generous to share it with others, but I can imagine that probably is huge for your own process, right? Going every day, sitting down 20 minutes before the market and going through a regimented list like that must be huge to keeping your finger on the pulse of the market, right?
By the way, that's at 6:30 in the morning. The market's 3 hours away. But yes, teaching and giving levels and doing it implants it in your head so you can think clearly when you're ready to execute when the market opens. But that's just 6:30 to 6:50. By that point, that goes out to the world. It's free. And then that's how I've gotten a lot of my subscribers. They're like, holy cow, I can make money with you in 20 minutes. What if I was able to have access to your 30, 40 charts that I do from 6:50 in the morning till 8 o'clock? What if I was able to watch another morning call, which I do for paid subscribers 8:15 to 8:35? What if I was able to listen to you, be on a radio from 9:15, which I'm on, till 11:30, talking about what I'm seeing, how I'm seeing it, how it's going on. Like right here, this is what we call the Alpha team. This is, I'll put it right here. So basically, this is a lot. This is only 200 people still on there. They get to see my positions. They get to see what I traded on them flat. They get to see like when I, take it on, take it off. I post charts all day long here in the morning. There's literally about 35 charts up there by 8:15. So, although I'm a founding partner and the manager's like, you give out too much for free at 6:30 in the morning. I'm like, well, if they can make a little bit of money at 6:30, I'm sure if they're a real trader and they trade for a living, they're not going to mind paying X amount of money to be a subscriber to the Alpha team or my note. And that's the next step.
Yeah. And we didn't even really talk about T3 too much. Do you want to just give a brief explanation for those who don't know?
Yeah, well, T3 is, there's a lot of different entities. You have T3 Live, which is like an education platform, idea generation. I'm the chief strategic officer of a product called the Alpha team, where all day long I'm sitting here like this with them, talking about what I'm doing, how I'm doing it, and I'm giving them all my market prep. So I'm giving like 3 hours of market prep so they don't have to do it, but obviously they need to understand it in order to execute on it. The more they understand, the more confidence they have, and the more they could take out of a trade. So T3 Live is for those who don't trade in our broker-dealer. It could be at Goldman Sachs, Morgan Stanley. I've been to the Ukraine. Like if you look at this thing, this is why I'm so passionate about it. These are the guys from Ukraine. Those are my boys right there. I went there 4 different times. They have traders that trade the U.S. markets, and I've trained the Ukrainians. I've trained the Chinese. I was in Uzbekistan. So bottom line,
I saw you were in a documentary by the Chinese
CCTV
network there, right? Yeah.
Yeah. CCTV. Wow. Over 100 million people saw that thing. I go to China now. They don't pay attention to LeBron. Like, hey, Red Dog. No, I'm kidding. No, but anyway,
where can they find all that? ScottRedler.com, or is it T3?
T3Live.com is where I am. You could Google me and find but Red Dog T3 is my Twitter. I have like 200,000 community members there that I've been building. It's not a lot. I have about 500 traders that are with me on the Alpha team. I have a few thousand that subscribe to my note, and I just do it every day in, day out, every single day. What you see is what you can get. Even myself, this has been a tough year. The last 3 weeks are good. I'm finally getting back to my own high watermark. I pay myself quarterly, so I have the luxury of building a business, so I have a little bit of a backbone. That's why I really care about the traders that live every single month, that if they don't make money in a month, they're not getting a check. So I feel for them. I did that for 10 years. My wife almost didn't marry me. She's like, what do you mean you don't have health insurance and you don't have a salary? I'm like, don't worry, honey, I got it under control.
We'll figure it out.
Whew. But anyway, I'm like, you be a neuropsychologist. We'll use your health benefits for a little while. You be the stable one. I'll go out there and be a little up and down. But it always smooths out. So if you have a little confidence in yourself, and you get a process, you can make it as a trader. It's a little harder. There's a lot of machines out there, but stocks, if a stock can go from 100 to 130, it's got to follow a path. And that's what technical will show you, the path of movement. And you have to figure out you could get involved in a way that works for you so you can take money out of it. And then we do have T3 Trading, which we have a prop trading division where if you take a license, you can work and become a professional trader at T3 Trading Group. We have I don't even know. We have a few hundred associated members that trade in our BD, use our economies of scale because we have so many traders, they could have good efficiencies. Then we have a retail division where it's like a Schwab. They could just come in with their own money, and get T3 Live to them and all that kind of stuff. We have a futures division. I think we just opened up an office in London the other day. I saw the guy. We drank a pint together. Awesome. At the last little trader powwow. But so we have a lot of things. I'm typically here in Short Hills, and I'm on Fox Business twice a month. But here is what you see is what you get. And I try and just let everyone know it's been 25 years, and it's not easy. But in order to stay in the battle, you have to figure out what makes your brain work and always face the music. You can't conquer problems. You can't conquer P&L if you don't know what it is. I'm not going to look at it. No, you look at it and you figure out, how you take a step-by-step approach to get in a better situation.
I like it. I like it a lot. And this was a really fun conversation. We got to leave it here, but I hope we can chat again soon. And you're always welcome on the show.
Oh, thanks for having me. I appreciate you. Do a great job. Your email that puts all those charts together, saying you're caught up, it really catches people up. So anyone watching this, make sure you look at his email because he's got a lot of great resources out there. And if you feel like you're a little lost, if it's not me you want to follow, there's a lot of resources out there on Twitter, a lot of great technicians out there that could help you find your way.
Well, I very much appreciate that. Scott, you have a great weekend.
You too.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.